Everybody. Can you guys all hear my voice and see the screen right now? I see you there. You are connected. Everybody good? Everybody good? Cool. Okay. So we're going to be talking about something today, and I'll explain who I am a little bit here, but we're going to be talking about something today involving binary options and the application called the Ichimoku Cloud that I use to trade binary options and manage my trades once I am in them. It's a technical indicator that is available in most retail brokerage platforms and also in the Nadex charting package as well. So it's something that is accessible to all of you. It's also something that you could use, and I don't want you to get too intimidated if you think that this presentation is going to be a long explanation of technical analysis. I promise you it's not. I am not a CMT. We're not going to talk about complex wave patterns or anything like that, but it is something that is easy to use but very powerful. So Edgar says, after seeing my first webinar, I started to use it and love it now. Ichimoku is very good. Yeah, it's great. It's such a good tool for really any type of trader, but particularly lends itself well to binary options and Nadex spreads. So without further ado, we're going to go ahead and jump right on in here because I do have to read a couple of risk disclaimers. Day trading, short-term trading, options trading, swaps, and futures trading are extremely risky undertakings. They are generally not appropriate for someone with limited capital, little or no trading experience, and or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks, and you can lose your entire investment. No trades or recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Please contact your broker or registered investment advisor for execution margin and all other capital requirement questions. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and alphashark.com. Okay, so we have another quick risk disclaimer here. Trading on Nadex involves risks which may result in financial loss and may not be appropriate for everyone. Any trading decisions that you take are solely your responsibility. The information presented in this webinar is for informational and educational purposes only. The contents of this webinar are not an offer or a solicitation of an offer to buy or sell any particular financial instrument offered on Nadex. Past performance is not indicative of future results. And that's something that I want to make very clear as we go through this, because I'm going to go over several examples in my Nadex demo account in front of you guys to show you how the cloud works in there and different things that you can do. None of the things that I talk about are trades that I would actually put on today. We're just going to go over things as examples of the types of plans that I can use and signals that I can find using the Ichimoku Cloud. I'm not going to make any calls about the market today or where I think it's going or where I think it might be going through the end of the week. But my name is James Ramelli. For those of you that don't know me, I'm an active trader in equities and equity options and binary options here at Alpha Shark Trading in Chicago, regularly on CNBC, Bloomberg, Fox Business, BNN Canada. I also write for a number of other outlets as well. So if you haven't seen me on TV, maybe you've read something I've written. I've also presented in a couple of these Nadex webinars in the past. So a couple of you here I recognize, and I'm glad that you came back. I hope you enjoy the presentation today. And without any further ado, I want to jump right on in here. So we always say if you want to be more powerful in life, educate yourself. It's that simple. It's something we start at every single presentation we do with this slide. And I really think it applies quite well to the concept that we're going to talk about today and to binary options and Nadex spreads in general. I just wrote a really long article this morning and last night about how in 2017 I think it's going to be super important for a trader of any type, day trader, swing trader, whatever you might categorize yourself as, to have a really good understanding of every single tool set that they have available to them, because I think it's going to be a really tricky market going through 2017. I don't really have any long-term expectations or predictions that I'm making, but I think that it's going to be a market that I have to take a day at a time, and it's going to be kind of tough. I think in either event, either we don't see a big expansion in volatility and we have this kind of slow, choppy grind. That's a tough environment to trade in. Or we do, and we start to see big swings again, also a tough environment to trade with. But what's nice about being a retail trader in 2016, soon to be 2017, is that I have a whole basket of derivatives products available to me at the click of a mouse. That didn't always used to be the case, right? It used to be very difficult for retail traders to access markets. Nadex and binary options and spreads give me access to markets that I never would have been able to trade unless I was willing to risk a huge chunk of capital before. So that's kind of what we're going to be talking about here, is a way that I can approach these markets and manage these trades properly so I know whether or not I am going to be able to approach a new market that might present opportunities where others won't in 2017 with an appropriate amount of risk and a good risk management plan. So I'm sure most of you probably already know this stuff, but I always like to start this out with a couple of slides about binary options basics. And we don't really spend too much time talking about this because they're pretty simple contracts, and for a trader who has even the slightest bit of trading knowledge, this is a great way to kind of step into the world of derivatives. Everybody knows how to trade stock and futures, right? It's pretty simple. If I buy it, it goes up, I make money. If I short it and it goes down, I make money. Maybe I use some stop losses, but derivatives have a bad rap. In general, people think that derivatives expose them to outsized risk, and that's actually not the case at all. I hear people say all the time, and it drives me crazy, like, I don't trade options, I don't trade binary options because I heard you can lose all of your money. And it's true. If you're not using proper risk management, anything can be very risky. Trading stock can be really risky if I'm not using proper risk management. But what derivatives give a trader the ability to do that underlying products do not is leverage their capital for a bigger potential reward. And while that sounds like it's taking a big amount of risk, it's not. Leverage actually is something that helps me risk less, right? Because I can risk less to get a larger return. And that's something that's really powerful, and it's something that helps me manage my risk. I can use a proper risk management plan, and particularly with binary options, to approach markets with a known and guaranteed level of maximum risk. And that's going to be a really important concept throughout the next year, I think. So a binary option is easy to explain. It's a financial instrument with a payoff that is fixed. It can either be one amount or nothing at all. Binary. There's only two eventualities, two outcomes for the contract at expiration. So Nadex defines them as a security that asks a simple yes or no question. Will this market be above this price at this time? If you think yes, you buy the option. If you think no, you sell it. So if I think that the S&P is going to be above 2275 at noon today, well, I could buy that binary option. If it is, then they're going to settle at maximum value. If not, they settle at zero. Yeah, and these are also not marginable contracts. So every time that I put on a trade, I know what my maximum risk and reward is going to be, which is really, really useful for a trader that is navigating their way through what I think could be some volatile markets through 2017. So binary options, it sounds right off the bat like the volatility in returns could be rather high. People say this to me all the time, how can you say that it's less risky to approach markets with these contracts if they're going to go to zero or go to max value? Well, that's how it works at expiration. There's nothing that says I can't trade in and out of them before expiry. So what we essentially have made available to us are really high gamma contracts that allow me to put on speculative plays during the day that will be really responsive to small moves in the underlying market. The only way I can really kind of replicate that type of dynamic is to trade the underlying, which would involve investing a huge amount of capital and also probably involving myself in margin, meaning trading with money that I don't necessarily have because it's so expensive to trade those underlying contracts. So all of these dynamics make markets more accessible. Binary options settle with a value of 0 or 100. A trader can buy or sell them for any price in between 0 and 100. And contracts are standardized and settle with the same process regardless of the underlying market it's listed for. That's also very useful because it makes my expirations, and it makes my intraday trade management so much more simple. I don't have to really worry about the different dynamics between, you know, Dow options, S&P options, NASDAQ options, and crude oil options. All of those things trade differently, have different tick sizes, so managing positions in all of them during the day can be kind of a headache, right? It's not simple. This makes it much more easy because it's standardized across the board. It also gives me access to markets that I might not be able to trade otherwise. And I always put this list in here, and I always ask people, you know, what's missing here that you might want to trade? And I don't really think there's anything. I mean, we have every major index here in the U.S. and most of them overseas as well, every major commodity complex, and basically every major currency pair that I would want to trade. So, you know, one of the things that I was talking about in the piece that I wrote this week is how, you know, these areas of the market right now, what do you guys think? If you could describe price action in these names or in these indices over the past 2 weeks, what would you say? I mean, I would say that it's relatively boring, right? How many of you here think that we've been seeing, you know, wild and crazy moves in these indices over the past couple weeks? We really haven't been. And I know for a fact that a lot of the futures traders that I talk to on a daily basis and work with really have been struggling on an intraday basis to find opportunities for trades, because when they're trading when someone's trading futures, to set up a good risk versus reward ratio, there needs to be a bit of a range, right? The market has to be moving with some type of range that makes it worthwhile to put on a trade with a stop loss of a certain size and take profit targets at a multiple of that risk. Haven't really been getting those opportunities. But what if I ask the same question about this whole complex here? What if I ask that question about currencies? Those markets have been crazy, right? Absolutely crazy. We've seen some huge moves in currency pairs over the past couple of weeks here. And so a trader that, you know, wants to find opportunity, particularly a trader that is, you know, using technicals to trade, like the Ichimoku Cloud, might not be able to find it here in indices right now, but could find it in currencies. Binary options give me the ability to access these markets with the same standardized contract that I would be trading in these markets, and also allows me to do it with a lot less risk and a lot less capital than I would need to trade and profit in these markets, right? So having an understanding of these products and these contracts is really important going through 2017, because as we come into the new year, what we're seeing is, you know, the average true range in equities moving lower and currencies moving higher. So you can really use it to do whatever you want. I can use binary options. They're going to be more responsive and give me better opportunities to trade the smaller ranges in this, and also give me the opportunity to manage my risk better in ranges that are larger, like we have in the currency complex. So with all that being said, we're going to jump into the part of the presentation now that goes over the Ichimoku Cloud and its actual applications for finding trade setups. But before I do, does anyone have any questions thus far? I'm pretty sure that all of you here at least have this basic understanding of binary options, but I want to make sure that there's no questions about anything we talked about thus far before I jump into the trading plan here and start talking about using the Ichimoku Cloud to manage entries, exits, and risk during the day. As long as we're all squared away here, I can go ahead and move forward. Perfect. Okay. So trading binary options is something that I can approach in many different ways. Being options, they give me the ability to be very flexible, very nimble, and set up a lot of different types of trades that I might not otherwise be able to do without a large amount of capital, or in many of eventualities, I just wouldn't be able to set up the same dynamic. Intraday expiries give me a lot of flexibility in the types of trade setups that I can put on, particularly when we're approaching catalyst events. I can tell you that I basically flattened out all of my positions in short-dated equity and index options ahead of the Fed meeting and switched to binaries because I was much more sure of my risk in those contracts because I can guarantee my risk and reward levels at the onset of the trade. So what we're going to talk about is the different ways that I can use the Ichimoku Cloud to trade intraday, daily, and weekly expiries using binary options. As a trader, this means I can use them as a vehicle for day trading or for very short-term swing trades, meaning over the course of 1 week. We're going to look at 2 examples. We're going to talk about some live setups as well here, day trade examples and swing trade examples using binary options and using the Ichimoku Cloud. And before we do that, I want to talk about the cloud itself. So the Ichimoku Cloud is a technical analysis method that uses the past, present, and future to help traders identify at a single glance if a security is in bullish or bearish territory. It literally translates to one-glance equilibrium chart. It's a Japanese technical indicator. Just curiously, as we go through the next part of the presentation here, how many of you here have never ever heard of the Ichimoku Cloud before? How many of you here have never heard of it in the past? So a couple of you. Yeah, so a good number of you. Good, cool. So it's going to look kind of intimidating. We're gonna put it on a chart here, and you're probably going to look at this and say, "What am I looking at?" Because there's a lot going on. It's made up of 6 key individual components. We're going to examine them individually because, in general, when looking at equities, it's not something that I really have to have a super solid understanding of the calculation of each 6 individual components, but we're going to be using them in a much more direct way when trading binary options that I think it's important to have an understanding of them. And so here we have S&P futures on a daily bar, and you can see that the Ichimoku Cloud is applied to the chart here. It does look a little intimidating. There's quite a bit going on. We have a lot of different colored lines here going on, but basically what we have is a set of moving averages. And the 6 components have names. The Tenkan-san, the Kijun-san, the Senku-span A and B, the Kumo, and the Chinku-span line. And all of these are calculated a different way. They tell me a different thing. And then when put together, the sum of the parts, or the whole is greater than the sum of its parts. It is an awesome indicator that I can use in pretty much any market. And they particularly work well in commodities and currencies, which is really helpful for binary options because so much of the opportunities that I'm afforded with binaries are in those currency and commodities markets. So taking a look here at them labeled on a chart, you can see them all. We're going to go over them individually. This is the daily bar. Now obviously the analysis that I'm doing when trading binary options is probably not going to be done on the daily bar. Trading the daily bar or the indications that I get from the daily bar are really something that I would use for like a longer term type of trade, right? The daily bar doesn't really tell me a whole lot about, where the market might be going over the next, couple of days. Doesn't really give me a whole lot of insight there. But the reason that I've chosen the daily bar to show you for this example is because it's nice and widened out. We'll be able to see all the components really nicely. But as you adjust the time frame on the chart, all of these things adjust and move with it. Okay. Someone said, with my plan, I only trade the 9 to 11 a.m. contracts on currencies, and I use the 5, 15, and 30-minute charts. But I think those are good time frames to look at for those expirations. Yeah, so we'll go over that in a little bit here. I'm going to show you some examples of how I use the Ichimoku Cloud to find potential trade setups, and I think you'll see that that kind of early morning setup, at least for equity indices, is really kind of one of the stronger ones that I can get off of the Ichimoku Cloud. But let's talk about the individual components for a little while here. So the Tenkan-san line is essentially a short period, fast moving average. It's the highest high and lowest low over the past 9 periods divided by 2, plotted under the current bar that we are in right now. So on the daily bar, what we're looking at 9 periods of is 9 days worth of data. So the highest high and lowest low over 9 days on the daily bar is what we use to calculate this moving average. Now if we were to adjust this and move it to the 15-minute bar, it would be 9 15-minute bars. If we were looking at the 4-hour bar, it'd be 9 4-hour bars. If we were looking at the 5-minute bar, it'd be 9 5-minute bars. Okay, so it adjusts with the time frame that we're looking at. But what it shows me is kind of the first level of support or resistance on the Ichimoku cloud, and also can be used as a level to place a trailing stop if a market breaks the cloud to the upside. A lot of cloud practitioners use this level as a level for a trailing stop because it is supposed to be this first level of support. So basically, one of the really simple trade setups, and we're going to go over this a little bit more later on, is to trade breakouts of the cloud, right? So if we break to the downside, I look to get short there. If we break to the upside, I look to get long. Now, once that break happens, I have to decide where I'm going to get out of the trade should it start to pull back. A lot of traders like to use the Tenkan-san line as a level for a trailing stop. So in this particular example, the trader would have gotten long here, and if they were doing that, they would have been stopped out here. Still would have caught a nice piece of that move, but it's a more conservative way to manage the trade once I'm in. It also can be used as a level to add to a position. A trader that missed the initial break to the upside here might keep their eye on the market until it pulls back to this 9-period moving average, and then use that as a level to enter a new long or add to an existing long position that they had. And as you can see, that would have worked out really well too. And all of the things that we're going over here on the daily bar can be applied to the shorter time frames as well. It's something that I want to make clear. Okay, so what these moving averages tend to do then, because they flag so clearly are, more conservative, less conservative levels of support, is they give me a binary options level that I can use for a trade setup. And I talk about this in a lot of videos that I make about trading binary options. I can just draw straight lines over from all these support levels and say, okay, what strikes line up with these? These could be potentials for trade setups. We'll go over all of that in a live example in a little while here. The second component of the Ichimoku cloud is the Kijun-san line. And it's taken and calculated the exact same way as the Tenkan-san line, but it's a slower moving average. It looks at 26 periods worth of data rather than just 9. So the 9 and 26 period moving averages are kind of similar to your 10 and 30 period moving averages, right? We don't typically use those numbers when we're looking at moving averages, but this is how they're calculated. This is how this indicator was designed. And I actually truly believe that it is a better way to go about looking for support and resistance, because guess what? Not everybody is looking at these levels. And if I'm worried about, and this is especially important for traders who are actively day trading, if I'm looking at these levels and we're not really seeing a whole lot of activity on these levels because not everyone is looking at them, I think they're much less likely to be victims of stops getting run if I use these levels rather than fib levels or moving averages that everyone else in the world is looking at as well. Okay, and that Kijun-san line is just the second level of support, just like I described. The 9-period moving average is one more lower. So the Senkou-span A is a moving average of the Kijun-san and Tenkan-san plotted into the future. It's completely different than the other moving averages because we don't draw it right below the current bar. It's actually projected out into the future. So the calculations that we get after today's close are plotted 26 bars into the future, so 26 days into the future. What that means is that we get this forward-looking component of the Ichimoku cloud. And I think a lot of traders look at this and misunderstand what it's telling me. It's not saying anything about where the market is going to go. It does not give me a price level. So if you're looking for an indicator that says, okay, based on this price action, we're going to go to this level to the upside or this level to the downside, then the cloud is not going to tell you that. What this tells me is how strong the current trend is. If this forward-looking component of the cloud is strongly upward sloping, then it tells me that the trend is sustained and pretty strong to the upside right now. Likewise, if it's sloping lower, it tells me the opposite. And anything that happens, you know, with this forward-looking cloud, right now in the SPOOs, it's very strong and upward sloping. If we see it start to flatten out or move lower, that could be an early sign that trend is getting exhausted. And again, all of this can be applied to the intraday levels as well. The second component of the actual shaded area, the second bound of it, is the Senkou-span B line, and it's calculated by taking the highest high and lowest low, dividing it by 2. We're looking at 52 periods worth of data, and plotting at 26 bars in the future. Pretty simply put, if Senkou-span B is on the bottom, then it's a bullish cloud. If Senkou-span B is on top, then it's downward sloping, it's a bearish cloud. Okay? Now, these flips of the cloud that we see here, and you can see that on the chart, it went from, you know, it went from bullish to bearish for a second to neutral to bearish back to bullish. These flips in and out of bullish territory happen more on intraday levels. That is something that you're going to notice, and that makes sense, right? Because price action is faster. You know, a 5-minute bar, it can swing around a lot more than a daily bar. So when we're looking at this, we're basically just looking to see where the market is relative to the shaded area in between the Senkou-span A and B, which we call the Kumo. That's just the shaded area in between here. If you take nothing else away from this presentation other than this, make it this. Anything above the Kumo, shaded area, is in bullish territory. Anything below it is in bearish territory. Okay. The final component of the Ichimoku cloud we call the lagging indicator. It's simply the current bar's price plotted 26 periods into the past. Now, I think that this has a little bit more of a useful application to longer time frames. For our purposes, trading binary options, I really don't think that we're going to be putting too much weight into this, right? I really don't think that that's going to be something that we focus too much on. One of the things that I can use it for is a confirmation of final check on a setup I might be, you know, somewhat on the fence about. For example, here, you know, if I look at the break to the cloud to the upside here and then go back, we're still inside the cloud with the lagging indicator, but then once it breaks to the upside, that might be a confirmed signal for me. And you can see the lion's share of the upside move happened after that. But for intraday trading, don't really think it's all that important. Okay, so I like to use the cloud because it's forward-looking, unlike moving averages, fib levels, and other popular technical analysis methods. It's not something that everyone is looking at and using to set their stops. Unlike simple moving averages, we're looking at more data. We have a set of moving averages that are looking at different time frames, different amounts of data, and giving us levels of support and resistance based on that. Gives me clearer levels of support and resistance for setting profit targets or stops as well. And this is the thing that I think makes it the most applicable to binary options, is that it can be used as a tool for pretty much any product. It's a price action indicator. So I can use it for equity indices, currencies, commodities, what have you, right? It's going to apply itself well to all of those things. So I want to go over some trade setups here. We're going to go over an example that I have here in my slides, and then I want to go over some live examples. But before I do, does anyone have any questions about the Ichimoku cloud or anything we just discussed here? Any questions, guys? Which indicators work well in conjunction with Ichimoku? I think a number of things would. You know, like I said, the Ichimoku cloud doesn't really give me much in terms of like projecting price targets. It can tell me when markets are about, you know, could be ready to break out, or when they're breaking or failing at significant support or resistance. So, you know, pairing it with something like fibs that might give me some upside targets or downside targets once I'm in a trade could be useful, or something else that actually projects price targets could be useful, because basically what the Ichimoku cloud tells me is, hey, this is breaking significant support, or hey, this is breaking significant resistance and could see a nice run here, or hey, the trend is failing or starting to reverse, but it doesn't really tell me about where the market might go after that. It's more of a trend indicator than a than like an actual indication of where the market might go. Yeah, absolutely. We'll go over that in a little bit here. Can we use this graph for stock trading or limited? You can use it for anything. I mean, I'm going to go over examples here that are kind of more focused on indices, because the binary options that we have available to us are for listed indices and commodities. And honestly, I think that using this is probably the best way to go about that, because I need some type of indication of when markets might be ready to trend or when they're not trending, and that's kind of something that we kind of glossed over. One of the other benefits of the Ichimoku cloud is that it can tell me when markets are choppy and possibly something that I want to avoid, right? It's difficult to trade in a choppy market. Binary options make that a little bit easier, but in general, it's tougher to trade in a choppy market than one that's trending well. And because this is a trend indicator, it'll tell me right off the bat fairly quickly, hey, this is a market that's trending well, or hey, it's not, it's very choppy, you might want to avoid it, okay? But let's go over an example here. So binary options versus futures and stock. I can take these trade signals that the cloud gives me using futures, but in general, that's going to be a much riskier proposition than doing it with binary options, which is what we're going to go over now. Binary options, as we discussed, they might have a higher volatility in returns, you know, because they settle at 100 or at 0, but that's something we can smooth out with profit targets, and we'll go over that. They don't trade tick for tick with the underlying, but because they have such a high amount of gamma because of the short-dated expiries, they're very responsive. It's not going to trade tick for tick, but they're much more responsive to a small move in the underlying than, say, a monthly option in the Dow futures would be. Right now in Dow futures, if I wanted to trade options on them and not risk as much capital as is needed, or I didn't have as much capital as I need to trade the underlying future, I would only have one option available to me. The front month option are March options, or 86 days to go to expiration. So let me ask you guys a question. Let's say that I wanted to play a quick pop in the Dow. If I wanted to do that, how would I be able to do it on an intraday basis and get the responsiveness that I want? Would I be able to do it with standard options? No, probably not. And I'll show you guys the market here. These are standard Dow options. Take a look at this. I mean, the market's at 19,900. The 19,900 options are 467 handles. That's crazy. That's going to be so much risk. And they're also not going to be responsive because the gamma isn't very high in them. So it's a tricky proposition unless I want to use something like binary options. The trade-offs are there. I mean, I'm not going to say that there's not some cons to doing it with binary options. The volatility and returns, they don't trade tick for tick with the underlying, but the risk management capabilities and the fact that I don't have to load up into such a heavy position that isn't going to respond well to a move in the underlying today, I think the trade-offs are clear and show me that the binary option is the way to go for an intraday trade setup like the one we're about to go over here. They're still options. They have better risk management capabilities than the underlying futures do, or the standard options in the futures markets. Binary options require a lot less capital than futures or stocks. So let's take a look at an example of that right now. So we have futures trading around 2132. This is an older example, but we'll go over a live one here in a second. The daily binary options, the US 500 greater than 2134 binary options are trading around 40 bucks. Okay, so what that means is that for $40, right now, I can put on a position where at the end of the day, if the market is above 2134, it'll settle at $100. So I'm going to get $60 in potential profit against my $40 in risk. My $40 in risk is also never going to change. As soon as I put the trade on, that's what it is. It's not going to change, and I cannot lose more than that $40 that I put into the position, plus my exchange fees, obviously. But what is my exposure in the futures? If I buy the S&P futures at 2132, my margin is about $4,900, between $4,900 and $5,000. For most traders, you know, I would say that there might. Oh, can you guys hear me? I think I just got disconnected for a second there. Okay. As you see in the bottom right-hand corner here, I was just given a little alert that my connection went away for a second. All right, cool. Slight hiccup there. We're good. So that's not my risk. The $4,950 that I have to post in margin to control a one lot in the futures, that's not my risk, right? That's just what they want from me to hold in margin for me to have this one lot in futures. Let's say that I have a profit target of 2134 and a stop at 2130 in my futures, okay? First of all, let me ask you guys this question. For those of you that are familiar with futures trading, is a 2-point stop a big stop in the S&P? Yeah, I mean, can I really have that trade on with a you know, a high level of confidence that my stop isn't going to get hit? No, right? Exactly. I mean, that's 8 ticks. That's nothing. 2 points is 8 ticks. I can get chopped up taking trade setups like this all day long. And I might not even be giving myself a chance to be right. I mean, the market can sell off 2 points and rally 4 points like that at any time during the day. So if this is my setup, my risk is $100 per one lot. My reward is $100 per one lot. My break even is where I entered the futures. If I'm stopped out, which we all just agreed is a pretty high likelihood that that could happen, what happens? I mean, my position is done. If the market comes back in my favor, then it doesn't matter because I am no longer in the trade. Am I giving the trade enough room? No, we agree with that. And my reward to risk ratio is risking 2 points to make 2 points. It's 1-to-1, right? The binary options trade setup, the same move would happen, right? I would need the same 2-point move to the upside, well, 2.25 point move to the upside to get above 2134. And in this particular example, I am able to stay in the trade and get a better reward to risk ratio. And it's significant, right? What is the difference between a 1-to-1 and a 1.5-to-1 reward to risk ratio in the long run? A lot of people say that's not that big of a deal, but do we all agree that 1-to-1 reward to risk and 1.5-to-1 reward to risk in the long run is a very big deal? I mean, that completely changes the performance that I need to have out of my trades to be profitable in the long run, right? It's very significant. And as you can see here, because I'm using a daily option, at the end of the day, this trade is done. Regardless of what happens, I'm out of the trade. The risk is off of my books. If the market moves lower, say we sell off 5 handles and then start to rally back, well, that's fine. I'm not going to get stopped out of my trade. I'm still in it. The binary option might go from $40 to $5, but I'm still in the trade. And I don't have to worry about losing any more capital or adding to risk to participate in any type of rally back. So as you can see, there's a lot of benefits to the binary options trade setup. So now that we're clear on all of this, and does everyone understand the differences between the futures setup and the binary setup that I just went over? Because now it's time for me to pull up my Nadex account here and start going over some other live examples with you guys. Does everyone understand the difference between those two trade setups and why one is like screamingly better than the other one? Does anyone look at that, and this is a better question, does anyone look at that and say to themselves still that they would rather have the futures trade on than the binary options trade? Does anyone look at that and say, okay, you know, the futures position is something I would rather have on than the binary trade? I don't see anyone answering yes. Yeah, exactly. The reward to risk setup is clear. You didn't completely understand the futures trade? Okay, so let's go over that one more time, because if one person had trouble with it, I would imagine more than one did. So if I buy the futures at 21.32 with a stop at 21.30 and a profit target at 21.34, my risk and reward setup looks like this, right? So here's a chart of the market. Let's say I'm long from 21.32. Okay, I'm long here, and I have two orders placed out with that. 21.30, I have a sell order there, and 21.34, I have a sell order there. Okay. So what happens if the market, after I enter my trade, rallies up to 21.34 and I get filled there? Well, I've made a profit of 2 points. S&P futures, or E-mini S&P futures, are worth $50 a point, $25 or $12.50 a tick, 4 ticks per point. My profit here would be $100, right? Now let's say that rather than rallying, the market sold off and broke below 21.30. Well, I'd get stopped out and I'd have a loss. I would lose 2 points. Would lose $100, okay? Now let's say that what happens here is the market sells off below 21.30 after I enter my trade and then rallies back and rallies to 21.34. Well, I don't get this because I'm already out of the trade. I've been stopped out and I have no position on the rally back. So what the futures don't give me that the binary options do is the staying power against a move against me and then a rally back in my favor. Okay? Does this make a little bit more sense now? Yeah. Oh, good. I'm glad that this helped. As I was drawing this, I was like, I think this is a better way to explain it. So with the binary options trade, it doesn't matter what happens between now and expiration. It's that ending print that is important to me, right? So let's say that, I'm in this position. The market's at 21.32 when I put this on, okay? And we sell off to, let's say, 21. Let's say we slam lower to 21.10. Boom. Maybe this option goes to $0 or like zero bid at $5, something like that. But let's say the market rallies back and we hit 21.35 on the close. Well, I didn't get stopped out here. I'm still in the trade. It's an option. It can never lose more than $40. So I don't have to add to the risk. And as it comes back, if we close at 21.35, the option settles at $100 and I make this $60 per one lot in profit. Okay? So for a market that might have some intraday spikes or catalysts coming out, you can see why the binary option is going to be a better approach to that because of that dynamic that we just explained, right? So let's go over some examples here using the Ichimoku Cloud. So I want to start with S&P 500 options. We're going to look at the daily options to start here. So typically speaking, I think that the 5-minute bar can be a little quick for futures. So I like to look at it on the 15. And luckily for us, Nadex has in their platform a handful of some pretty cool technical indicators, one of them being the Ichimoku Cloud. Okay, so when I'm looking at this now, and we're kind of at the mercy of the market as to whether or not I'll get some good examples to go over with you guys. When I'm looking at this now, what do we notice about the Ichimoku Cloud, the shaded area of the cloud itself? Is there any slope here to the cloud? Is there any positive or negative slope to the cloud? Is it showing us any strong trend one way or the other on this 15-minute bar? No, not really, right? I mean, we can go all the way back to to yesterday and see that basically since the close yesterday, market has been pretty choppy, sideways. We've been above the cloud for most of it, and we broke below it here. But what we're able to do using the Ichimoku cloud is find levels that I might be able to use to trade binary options trade setups, okay? So let's say that I was, and again, remember this is not a, this is not at all a recommendation or a prediction or call on my behalf for where I think the market's going to go by the end of the day. But let's say that I wanted to put on some trade setups here. 2167 is about a 1.5 higher than where we're trading from right now. And if I take a look here, I can use the levels the cloud gives me to trade a possible setup, right? We're breaking or heading back to the Ichimoku cloud. So if we break the cloud to the upside, this binary option contract might be something that looks interesting to me. You know, if I bid 35 for this on a one lot, I would be risking 35 to make 65 by the end of the day. It's a pretty good reward to risk ratio. If I wanted to kind of replicate that in the futures, well, I would be buying the futures at the level they would be at above the cloud with a stop somewhere below the cloud. And on a day like today when the cloud is very thin, that's just asking to get chopped up, right? That's just asking for a choppy trade setup that probably isn't gonna hold up very well in the futures market. But because binary options allow me to get a good reward to risk ratio on a small move like this, this is a much better way to approach this trade setup, right? So let's try and find a chart that isn't quite as sideways here. I think we'll probably find one in, let's try the euro perhaps. So if we take a look here at the euro, we'll go to 15 minutes, go to technicals. We can see that the Ichimoku cloud is much more kind of clear in what it's saying about trend now. What is the general trend that we notice here in the euro futures, or the euro right now in this pair? Yeah, it's up, a general uptrend. And what we can also see is that in general, it's been pretty responsive off of the levels that are flagged by the 9 and 26 period moving average and the support levels inside of the cloud. So what I can do is take trade setups based right off of the levels that I have here on the Ichimoku cloud. So I'm trying to make this drawing go away, sorry. So what we see is that as we consolidate here between the 9 and 26 period moving average, we're sitting on what should be support. So what I can do is find the binary option that lines up best with that and take a trade setup if I think the market is going to hold at this level of support. And you can take the level, look right at where it is, and you can see that the 26 period moving average is 1.0427, and we have a binary option that's 1.042. So the cloud gives me the level of support that should be holding up here according to the cloud. If I think that the market is going to continue higher and that this kind of longer term, at least on the 15-minute bar, trend is going to stay intact, then this is telling me, hey, this might be a good contract to let that view play out. You know, if I put a bid in here for 70, which would probably get a fill, I'm not getting a home run winner reward to risk ratio. I'm risking $70 to make $30, but I also don't even need the market to move from here. The market could just sit here. It could rally, it could even sell off a little bit as long as it's above this level at 3 p.m. expiry, which is, what, in like 2 hours. And for that, I'm given the potential ROI of like 43%, right? It's really, really difficult to replicate that using other options, and actually probably impossible to do it with the spot currency. I can't set up a trade in the currency pair that makes money if it doesn't move. that isn't going to happen. There's no way to get long or short the spot currency pair and make money if it's at the same level at the end of the day that it was when I put the trade on. Does that make sense to everybody? Is it a little bit more clear now, looking at this setup, how we can use the Ichimoku cloud to find levels? And you can see, I mean, we are finding support here. You can see it bounced off this level a couple times in the last handful of 15-minute bars. So really kind of natural indicator for binary options, because it draws the levels on the chart for me of support and resistance. Let's take a look here at another one. Let's see if there's anything good in commodities. Crude oil. This should be a nice one. It's been selling off nicely. Okay. So as you can see here, we're well below the cloud on the 15-minute bar here in crude. It doesn't look like we've got a ton of strikes available in daily options here right now, but you know, I could use the levels would be the same on any chart that I looked at. So I could use shorter dated ones if I wanted to, intraday ones. But what we can see here is a pretty well developing bear trend, right? We broke the Ichimoku cloud to the downside back here earlier this morning, right? And we've been trading down since then. The future cloud is also sloping lower in the future, right? Now, if I wanted to play continuation to the downside here in crude oil, there's a couple of different ways that I can do that. Well, I can go and take our first level of resistance, and this, remember, this is where if I was trading futures, I'd probably look to add to a short and see what binary strikes line up with that. In this case, I can probably sell these binary options, the 53s, for 20 bucks. Market's at 52.75, right? So the market would have to either rally back a quarter or come back well above this level for this trade to not work out. If I sell these for 20, I'm risking 80 to make 20, but that's still a very nice reward to risk setup. I'm going to get a 25% ROI in a position that I don't actually even need to move by the end of the day. I can also get a little bit more aggressive if I wanted to. The Ichimoku cloud is telling me here that right now the downward trend is fairly strong and should probably continue. So if I don't want to be that conservative, I can actually get a little bit more aggressive with my downside target. The next stop to the downside here is 52.5, about the same size move to the downside as the room I gave that last one to the upside, about 25 cents. Now if I sell these for 76.75, and let's just call it 76 to make the math easier. If I sell these for 76, I'm risking $24 to make 76 bucks. That's a fantastic reward to risk ratio, better than 3 to 1. And the Ichimoku cloud is telling me that this trend should continue throughout the rest of the day. So again, a very, very simple and easy way to take this idea of the Ichimoku cloud and apply it to a binary options trade setup. And it gives me the ability to like find all these different setups, and I can take the trade-offs between one or the other. This one has the worst reward to risk ratio, but doesn't require as big of a movement. This one has the better reward to risk ratio, but requires the market to continue its trend to the downside. The Ichimoku cloud tells me that both of these trades would be something that could work out by the end of the day here, given the slope that we have in the cloud and the way that it's traded since breaking the cloud to the downside. Okay, so I want to talk a little bit as well about some more complex strategies also, because this is a part of trading binary options as well. The way that I can approach these is with more complex types of ideas and setups. So with futures trading at 21.37, if I expect a large move in the market by the end of the day, but I'm unsure on the direction, I can buy straddles or strangles in the SPY options and the E-mini S&P futures options, but those are going to be expensive, right? It's going to expose me to a lot of risk, and it's also going to expose me to time decay in a big way. So what I can do here is trade two different binary options. In this case, I buy the 2140s, which are the upside strike. I sell the 2134s, which is the downside strike, both 3 points away from our current level. And I can do that and get a maximum risk of $70 with a reward potential of $30. How does that compare to a straddle that I could build with standard options? It is much better on a reward to risk ratio and way, way cheaper, I can tell you that much. It's not a bad reward to risk setup either. Again, we kind of looked at a setup like this a little earlier. I'm risking 70 to make 30. That's a 43% ROI, return on my risk, if this trade breaks out one way or the other. So not only can I use the binary options to trade along with momentum, like the examples we just looked at, I can use it to trade non-directional breakouts ahead of catalysts, or if I wanted to flip this around and sell this spread, I could fade these movements as well, right? So a lot of different things that we can do with these. A lot of different things that we can do with these, and I think I have a comparison here of the straddle on, yeah. So again, I can't, it's the same thing. I can't get the this type of reward setup in standard options. It's just not going to happen, okay? So, this took a little bit longer than I thought it would to go through all of this. So I do want to give you guys a chance to check something out that I have to offer you here. This is completely free. It's an ebook that we have on the Ichimoku Cloud. You can go to this link right here and get it. You fill out the information on the link. It just needs your name and email address. And you can get a ebook sent to you for free. It'll go right to your email inbox, and it's all about the Ichimoku Cloud. So if you enjoyed anything of what you heard today, please go pick up the book on the Ichimoku Cloud. It's completely free. It has a lot of examples and a lot of pictures in it that make it very clear on what the Ichimoku Cloud is, how you can use it for different types of trading plans, and things like that. Really, really something that I think would be interesting to you if you liked anything that we talked about here so far today. So please check it out, alphastart.com/Nadex DEES 2016. Everyone should do it because it is completely free, and I hope you get the book and enjoy it. I have about 3 minutes left here, so I want to take some questions from you guys if you have them. So please let me know. Explain the red and green indicator bars in the chart one more time. I'm not sure which ones you were referring to there. Were you looking at the 9? Do you mean the 9 and 26 period moving averages? Yeah, sure. So those are basically fast and slow moving averages that I can use for flagging levels or finding support and resistance. In this example, on this crude oil chart, here's the 9 period moving average, here's the 26. Once we break the cloud, these become my first levels of support or resistance. When we're breaking to the downside, it becomes my first level of resistance, right? So in this particular example, I could use this level as a trailing stop, or I can use it as a level to re-enter a short should we test there, because that should be resistance in what is a established downtrend. This is the second level of resistance in that established downtrend. So both of these levels can be used either for entry, or I can just take them and draw a straight line over to a binary option strike that lines up with it and try to take a trade setup based off of that. No, you should be able to. This should bring you right to a. This link should bring you right to a page to get the ebook. Yeah, it's right here. See? All you have to do is click this link. Oh, I don't know why that's not working. Hang on a second. All you have to do is go to this link. See? You fill out your information there, and it'll you get the book sent right to you, Chuck. Did you fill out the link? Check your inbox. You'll have the ebook there. So as soon as you fill out the link, you get the ebook sent to you. What is the winning ratio using this indicator? Well, it's a lot more than, there's a lot more to it than just taking every single break of the cloud. I mean, there'd be no way whatsoever to even test test that. There's a lot of checks and confirmations that I do when I'm using the Ichimoku Cloud. I check it against longer time frames and broader trend as well, and we talk about all of that in the ebook. A lot of applications for the Ichimoku Cloud. A lot of traders really don't even use it for taking signals, but rather confirming trend against other indicators that they use. Yeah, I mean, any indicators, and that's a good way of, thank you for articulating that a little bit better than I did. Any indicator's success depends on the person using it and the strategy that they're applying it to. How would I look for an out-of-the-money setup with Ichimoku? So that's a good example, Edgar, of what we were talking about earlier when I said it might be useful to combine that with another indicator that gives me some upside levels. Basically, when I'm looking to do that now, what I do is I look for, something, a level that, either old price action or old support and resistance indicates to me might be touched or broken if the trend continues, and then use that. But if you have some other, indication like fib levels or something else that gives you actual projections, then that can be coupled really well with the Ichimoku Cloud, because it doesn't really say, like I said, it doesn't really say, okay, here is where the market is going to go, this specific price level. It's more so a, hey, this is what the trend is like right now. Expect continuation or expect reversal. Which I think is incredibly valuable in and of itself. Alrighty, guys, so I'm going to go ahead and put the link in here for you all one more time. Please make sure you go check this out. It's a great little piece of content about the Ichimoku Cloud. And please feel free to send me any questions you might have to james@alphashark.com. And thank you to Nadex, as always, for having me. I hope you guys enjoyed the presentation and found something useful in it. Please feel free to shoot me an email if you want to chat any more about the cloud or my approach to binary options, and I'll be happy to talk with you. All right? Thank you, everybody, for your time. And as always, happy trading.